Let's connect then with our chartists to find out what their outlook is on the markets. Devin Choksi joining in on the fundamentals, and we've got Naresh Mirani with us on the technicals. Let's get in a take from you then, Devin, as to what the outlook is when it comes to the broader markets versus the frontliners, because as per the historical data, it seems like the broader markets are likely to take a leap ahead as compared to the frontliners for the month of October. Do you reckon it will be the case this time as well?
So good afternoon, Aman. Well, I believe that importantly, the valuations are going to be the driving factor hereafter. Whenever you find a stretch valuations in the broader market, give it in the mid cap or a small cap either, I think the market won't be very easy to accept that premium valuation. Given the fact that we are now on a higher base as far as I think the corporate earnings are concerned, vis-a-vis last year. And given the fact that I think on the same higher base, a higher growth is not seen, the growth is now coming to actual reality, wherein if economy is 11.5, 12% nominal rate of growth, then the corporate earnings are growing in the vicinity of around 18 to 20% at best. And in some cases, exceptional cases, I think they're growing about 30%, where they are getting the premium valuations as well. But in my understanding, there are few such cases, and those stocks are already premium cutted. Those stocks which are not, I think, going to have the higher amount of growth rate attached to it, probably I think the valuations are likely to get moderated. There may not be necessarily always a price correction, but there would be a possibility of time correction in this kind of a situation. So we are a little bit mindful on this possibility, and that's where I think we would play safe. We believe that at this point of time, some of the large cap companies within the Nifty 50, Nifty 100 basket, they remain relatively more solid, more sure about, I think, the growth prospect going forward.
Okay, that's the take coming in on the overall market construct. Kunal, hi, afternoon. What is it that you're making, trying to consolidate within a narrow band, but fair amount of choppiness as well in that narrow band itself? And then, of course, the fact that from yesterday, we've seen a decisive break of that 26K mark.
Yeah, the last 2 days we've seen the index falling sharply, Bank Nifty retracing by 1500 points. Today there was a bit of a fight at the start where, from the bulls, where you saw the indices trying to nudge back into the green territory. But then I think that's, the way in which the markets have panned out today indicates that maybe the strength from the bulls is not as strong enough required for the indices to get back into a recovery. However, I think, in terms of levels, what we would be looking out for is that if the yesterday's high for the index for both the Nifty as well as the Bank Nifty, that gets crossed over, then we could be looking at the index starting to get into a recovery. So which means we could be looking at the index going through those phases of intraday bounces, but till the time we don't see the indices breaking past about the 1 day, 2 day swing high, then I think it could be very difficult for the index to get back or convert these bounces into strong uptrends. So which means one should be looking to play out for a minor range for the indices or minor bounces over the next couple of days till the time we get this confirmation on the technical charts.
All right. Meantime, let's get in a view, Devin, from you on some individual newsmakers. And clearly, the gold financiers are under stress in today's trade. Do you believe that there is actually a reason for worry? What do you believe is going to be now the course of action from some of these gold financiers, given that the stocks as well are feeling the heat today?
So some amount of filler and the ground check that we have done probably, in that I think we are getting that the financing is being done at an aggressive rate for most of the people given the festive season, and against which even the lenders are borrowing money at a higher cost in order to satisfy the demand from the market. So I think that's where probably I think amount of stress I think which is being experienced currently. In this kind of a situation, if the price correction takes place, in my understanding, if the rate of interest goes down in the global economy, probably I think you are likely to see some amount of moderation in the precious metal prices, gold prices along with. That could potentially create some kind of a pressure on the recovery front for many of the NBFC companies. So it's a reason to remain a little bit more careful about. It's a reason to remain careful about the practices which some of the gold financing companies have adopted. That's where probably I think one would exercise the caution currently.
In fact, Varun as well joins in. The RBI has flagged off irregular practices by gold financiers, urging them to review their policies and conduct a portfolio review as well. And this comes on the back with, sort of RBI wrapping the knuckles of IIFL as well. So let me take it across to Varun and find out what more does the RBI have to say about gold financiers.
So in the past, we have seen RBI is actually closely monitoring the gold loan companies and the loan given by these companies, and now RBI has come out with several observations where they say that there are irregular practices in gold basically against pledge of gold ornaments and jewelries, and there are shortcomings in use of third parties for sourcing and appraisal of gold loans. Also, there are irregularities in undertaking valuation of gold without the presence of customers. There are issues with due diligence, lack of end-use monitoring of gold loans, and also loan-to-value ratio and incorrect application of risk weight. So, these are some of the issues which RBI has highlighted on gold financing companies. But brokerages have a different view. They say that this would definitely lead to some slowdown in gold loan. That is expected because of the strict action or the observations by RBI, but they think that the entities with lesser vintage in lending against gold jewelry could likely have more deficiencies, and companies like Muthoot and Manappuram, which have been regulated by RBI for many years, they are likely to be positioned better. There might be some risk and there might be overhang on the stock because of this news, but they still are comfortable with these companies, and between the two, they think that Manappuram would have a good safety of margin of safety. Jeffries say that the traditional gold loan financiers like Muthoot and Manappuram Finance, they have been audited by RBI periodically and they have very fewer gaps. Also, when it comes to IIFL Finance, they say that it should be unaffected because they have already taken corrective measures. So, the listed gold loan companies, no doubt they would have an overhang, but most of them are good, highly regulated by RBI, and there are periodic checks which have been done. So, if there are issues, there might be with the entities which have lesser vintage in lending against gold, but yes, there would be overhang on all the gold financiers, at least for today.
All right, thanks very much for giving us all of those details. Meantime, Naresh, let's check in on some of the charts then. And it's clearly the small cap end of the market that in comparison to the frontliners seems to be holding out quite decently. Just going to identify some of the names here that are active in trade. And you've got something like Deepak Fertilizers, that's up about 4%. Balrampur Chini in the green, Chambal Fertilizers as well. And KPIT Tech along with something like an MCX are holding out. How are the charts looking?
So starting off with Deepak Fertilizer, that looks promising. The stock is crossing 2022 highs, which where it topped out at 1050, 1080 levels. And we are getting into an all-time high as well. So looks promising. It's consolidated here for the last 2 months as well. So a buy at current levels, the stop below 1000 still looks interesting. Balrampur Chini is something which would take a pause given the rally in the last few days. The stock has broken out into all-time highs and continued. So I would wait out for a dip here. MCX is again a similar case which has rallied a lot. Would be looking at a case of a profit booking dip going forward.
The 1st of October is turning out to be a very tempered day of trade. We got off to a fairly decent start, but now it seems like consolidation mode is on and how. When it comes to the broader universe as well, it seems to be similar momentum that's playing out. Meantime, Deven, curious to get in your thoughts on the kind of auto sales numbers that have trickled in. What have been your thoughts? Did you think that rural recovery would have played out, which wasn't quite evident, at least when it came to M&M's tractor sales numbers?
Well, I think the M&M management has been pretty confident about the outlook going forward. Though I am not a particular, concern about, the month-on-month kind of a number. But given the kind of a monsoon that has played out in the country, out of 36 rain-catching states, if 33 states have got, adequate to better rains, quite possible that companies like M&M would end up generating higher amount of demand for tractors, both for its M&M brand as well as Swaraj brand of tractors. So in my viewpoint, the company should possibly do relatively better in its tractor business, which was up till now remaining quite stagnant in last couple of years. That can probably change, and see relatively better number of output in coming period. At the same time, I think the rural demand remains strong because of the good monsoon, good crop, and at the end of it, I think the higher amount of demand for the light commercial vehicles and also for two-wheelers. Now, that is a good possibility that we are going to see from the rural India in particular. So we remain relatively more confident. Of course, we'll be watchful about, I think, the monthly numbers, but otherwise, I think we remain directionally more confident about the process going forward for the two-wheelers, tractors, as well as for the commercial vehicles.
Motors numbers also just coming in, and the numbers are disappointing both for the CVs as well as the passenger vehicles. The company has said that there has been a slowdown in infrastructure project execution, reduction in mining activity, and an overall drop in fleet utilization, also because of the heavy rains, which resulted in their heavy commercial vehicle record a 25% year-on-year decline. In fact, Srishti is here to walk us through all the auto sales numbers which have come in so far. Srishti?
Well, it has been a mixed bag for the September auto sales data till now, because what we have seen is just the two-wheeler as well as the tractor division that has done pretty well for itself. But apart from that is the commercial vehicle select counters have disappointed, and alongside passenger vehicle select companies didn't perform as expected. Firstly, let's start from the two-wheeler pack then, because herein we have seen TVS Motors as well as Bajaj Auto coming out with great set of numbers, and we just highlighted for our viewers that the rural demand is holding on very strong for the two-wheeler segment. As so, the kind of discounts that all these companies have been giving to the customers, they were successful enough to get the demand and the numbers back in down, and indeed there was a double-digit growth for the likes of TVS Motors as well as Bajaj Auto. When it comes to the tractor division as well, on the back of the healthy demand growth, we have seen almost double the growth on a month-on-month basis for M&M as well as Escorts. But in the latest, we do have the passenger vehicle data as well coming in from Tata Motors, a sheer disappointment coming in for their passenger vehicle division. Along with that, even their commercial vehicle division is what has disappointed. For the passenger vehicle, the company did highlight that given the kind of subsidies for some of the strong hybrid models in key states, that has impacted their EV volumes. And not just that, there has been takeoff of the FAME 2 subsidy push, and because of that the sales were impacted. But on the commercial vehicle side, they do see that there was a slowdown in the mining activity. Because of that, their commercial vehicle numbers got impacted. So all in all, the Tata Motors numbers were not that great for the month of September, though the market were expecting a high number on that particular front. But along with Tata Motors, we also have the numbers coming in from M&M. What a set of numbers for the month of September. Look at the jump, because there has been a 14% growth on a month-on-month basis. And lastly, from the commercial vehicle, we do have Ashok Leyland and Eicher Motors VECV numbers. The companies did register a 16 to 19% growth on a month-on-month basis, and the numbers hold steady. So kind of a mixed picture for the September auto sales data, but it's the two-wheeler and the tractor division that are shining bright. Back to you.
Yeah, absolutely. Quite a mixed bag and quite a contrasting reportage from Motown when it comes to the September sales. Kunal, analyze the two charts, both Tata Motors and M&M for us, and what do you read now?
See, I think there was a point in 2022 when M&M was one of the laggards. Tata Motors used to lead from the front. But now on the shorter term charts, the trade is completely reversed. Right now, Tata Motors is a chart which is very, very fragile. I call it fragile because the stock is nearing towards its 200 moving average. And this has come after quite some time where the stock was very strong. There was period where the stock was an outperformer as well as a price performance leader for the entire auto pack for many months and many quarters. But I think that stock has now reversed in terms of the chart patterns. If the stock breaks below the 935, 945 mark, that could be a confirmation of a break below its long-term moving averages, which could probably spell some more weakness into the stock. M&M on the other hand, there was a bout of correction, I think a couple of months back in the month of August to be precise. But from there, the stock had recovered. So I think from 2700, 2750 mark, the stock managed to come back to the 3000 plus levels and now made a fresh high about 3150 plus mark. So M&M is a chart which is looking much more stronger at current juncture as compared to a weaker chart like Tata Motors.
Naresh, in the same vein, I mean, we've all seen stark outperformance when it comes to two-wheelers. Having said that, yesterday there was that aberration when Hero MotoCorp overtook Bajaj Auto in terms of the market share, and you did see quite a bit of crack coming in on Hero MotoCorp, although the rest of the market as well did fall. How is it that you're stacking up some of the two-wheeler majors now within your coverage portfolio?
Bajaj Auto is something which has already done really well. And in this case, the only way one can ride on is keep a trailing stop loss. But it is highly overbought in the short-term chart, so could get into a pause going forward. Hero MotoCorp, on the other hand, made a move into a fresh all-time high, and then we saw it correct over the last 4 sessions. But the trend is all okay out here till the time it holds about 5,600. iShare Motors is the one which is interesting, which is dabbling around that 5,000 mark for the last many days. If it sustains 5,000, 5,050, that could be a fresh breakout.
Okay, meantime, let's also find out what's holding out in trade today, because the frontliners are looking awfully tempered. But still, what's managing to hold its ground is IT as a basket. So Tech Mahindra, Infi, Wipro, HCL Technologies are in the green. Add to that list an M&M, which is up about 2% in trade. We discussed that quite extensively. There's Kotak Bank, 1877 is where the stock is at. And then some names like Nestle or an Ultratech Cement, as well as a Coal India, they're in the green. Curious, Deven, to get in your take on what the China stimulus measures would have meant for the entire metals basket, and how you're looking at the trajectory for the rest of the year.
Well, I think we remain relatively more confident about the prospects going forward for the entire metal pack as a whole, the ferrous and non-ferrous included. Couple of reasons. On one side, we believe that the global market prices would remain steady because of the China stimulus package. On the other side, we believe that I think India market story is playing out very well for metals. Infrastructure spending, social infrastructure spending, industry spending, automobiles, even for that matter, the AI-based infrastructure, which is related to data center and all, everywhere I think the demand for metal is probably increasing. So on demand side scenario, we are likely to see better times going forward, and I think the output likely to remain, I think, on a stronger side. On the profitability side, we are even more confident because the energy cost, particularly, is structurally coming down with the use of renewable power into the system. Be it captive or be it, I think, bought out power, it is still bringing down the cost for the metal commodity manufacturers. And that's where we believe that I think there is a protection in the margin. Both these factors to me, I think, appears, I think, as a good recipe. Probably, I think the market is factoring it as well. I think, and once I think they start getting the reflection into the results, I believe that I think some of the metal commodity stocks will find re-rating from current levels.
Devin, great to have you on the show. We'll let you go on that note. Before we take some closing strategies, we also spoke with Jim Rogers as well as Adrian Movat and Manpreet Gill this morning. And they're all talking about how China is actually going to impact the entire commodity move. Jim Rogers, of course, says that do not give up on silver and crude. That's where you will see some meaningful gains from these current levels.
The Indian bull market has been very much driven by local investors, but specifically looking at the FII fund flow impact here, I think there are two stages to this. At the moment, if you're running EM money and you've been outperforming, you've been very overweight India and underweight China, all that alpha has disappeared in the last week. MSCI China total return is up about 30% year to date. India's up a very respectable 26. I would see this as more of a relief rally in the commodities space rather than that's something that's going to be sustained. It may have more of an impact on precious metals, but I think for the underlying, fundamental base metals that are going into manufacturing activity, its impact is going to be relatively modest.
I do expect things in commodities to still do well, partly because of China and partly because of India. I mean, you have the two largest economies in the world trying to encourage things now. So commodities do not have a bad future. Commodities will be good in the next few weeks or months. If I were buying today, I own silver and I own gold, but if I were buying today, I would buy more silver because silver is still down a lot from its all-time high and gold is near its all-time high. The bull market in crude is not over. There are many reasons to buy crude, including the world's reserves, known reserves, continue to decline. So do not give up on crude. Do not give up on silver and do not give up on crude.
As an economist, I'd say, look, these are absolutely, I think, very significant measures. And I think more than the PBOC measures themselves, it's the expectations that have been set in motion that there may be more to come on the monetary policy side. But more importantly, I think what I'd be excited about is the signaling from the Politburo that there's more, that, reviving growth and sort of really providing more support to the economy is becoming more of a fiscal priority. Because one additional factor I'd add is on oil prices, because while metals might be the positive, if we do see improved sentiment in Chinese demand, that could potentially start to tilt the balance a little bit in favor of slightly higher oil prices.
All right, those are the experts talking about the impact of the China stimulus move. Meantime, let's also find out what those closing trade recommendations are. Naresh, what are you picking out?
So that would be a buy on Dr. Lalpath Labs. The stock has been in a strong uptrend over the last 6 months, rallying from 2,000 to almost 3,400. Went through a consolidation in the last 1 month. A good flag formation breakout today about 3,400. Could head up towards 3,600 in the short term.
Let's find out, Kunal, what you're picking out.
So there'll be a buy on AB Capital. The stock is nearing a breakout of its previous multi-month swing highs around the 242, 245 mark. So would expect the stock to do pretty well over the near term.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.